Today is Saturday, February the 27th, 2021, and the question posed in the comment section of our daily videos was, are banks at a good place to buy right now? For me, the best investing move that I've ever made over the last 20 years was to buy financial stocks that were dividend payers and to reinvest the dividends in those financial stocks. And since I was up in Canada when I started, I own a fair bit of Royal Bank, Toronto Dominion, a little bit of Bank of Montreal, a little bit of Bank of Nova Scotia Bank. And over the 20 years that I've been investing in banks, I've been reinvesting the dividends, and it's amazing how that has grown. So when banks have fallen on hard times and the prices go down, through the dividend reinvestment, you're able to buy the stocks at a lower price and just accumulate your position. But let's take a look at where banks are right now. And for that, we're going to use a few tools. Obviously, we're going to use charts. We're going to use tip ranks. We're going to use FinViz. Now, tip ranks is a great subscription platform. You can get a lot of information from it for free. And I would encourage you to start putting tip ranks on your daily, a tab on your daily browser. This is their landing page, their dashboard page, which is just tremendous. Here's I'm not going to go through it, but I'll do the separate video on that because the whole tip ranks platform has just grown so much in the last 5 to 7 years that I've been using it. But the consensus of the analysts that tip ranks collects data on says that the financial sector enjoys, is a strong buy. Not as strong as technology, but technology is sort of going through a down phase right now. Healthcare is rated above it, so is consumer goods, services, basic materials, and financials. But in a sector rotation, we could easily see financials, industrial goods moving higher to the top. And I actually believe that's what's happening right now. But there are not a lot of analysts who are calling for a moderate sell or a strong sell in the financial sector. So that's one thing to look at. Another one would be to look at some of the top experts in the area, and you can look for when you're looking for any stock in particular, pick one 5-star analyst and take a look at what that analyst thinks of the stocks in the financial sectors that he's tracking. And here's Dan Dolev from Mizuho Securities, who's ranked fairly high, 53% success rate, and he's doing 5% above the S&P over 1 year. And over 2 years, he is doing 16% higher than the S&P 500. So he's somebody you want to follow. And he's saying that just 3 days ago, Square is a buy, that WEX is a buy 3 days ago. 8 days ago, Fiserv. So take a look at those stocks as potential financial plays. So it's not just banks we're looking at here, but it's the whole financial sector. Then go over to FinViz. Go into FinViz's stock screener and start doing some narrowing down. Take the S&P 500, narrow it down to just the financial sector, just the United States, and then look at dividends. So let's go back to financial sector, and we want to look at just diversified banks. And of course, we're going to get a lot of ads. There's the 4 with their dividends. If we want to look at regional banks, there's the regional banks, 14 of them with their dividends. Nice thing about banks is that they pay pretty nice dividends. You can look at credit services like Synchrony Financial, Discover Financial, American Express, Capital One. You can look at capital markets. You can look at Morgan Stanley, Goldman Sachs, Charles Schwab. get a good feeling for the type of companies you want to invest in. Take a look at their charts. Now let's look at some charts. Let's start with the XLF, which is the iShares ETF for bank stocks. Let's look at it over a period since January of 2008. We had the big financial crash, and let's see how the XLF has returned against the Fibonacci's. If you were looking for an opportunity to buy, I mean, you've just gotten it. We have several weeks now, 1, 2, 3 weeks, where we're above the January 2008 high, which if you go back even further in time, back to the 2000, is the highest we've seen the XLF. Well, we've come back close to that in 2018. We hit it again in January of 2020. Then we pulled back to 50% Fibonacci of the financial crash wave here. And we're back up to it again. We struggled for a few months, and now we've made the pop. So the buy signal is certainly in for the XLF. You can add now, and when it comes back to test 100%, add more again. Let's look at some individual stocks. Let's look at US Bank, which is the 5th largest bank in the United States. Let's take a look at this wave up and this pull back here to 38.2. Take the green bar out of there. But see, this is how we check that our Fibonacci's are good. We take this line and we found support at 38.2, not once, but twice, and not nearly, but exactly. This is a good Fibonacci set. It's now broken above 78.6, and it's on its way to 61. US Bank pays a pretty reasonable dividend. I think it's in the area of 3.5%, but you can find out by going to FinViz and going to regional banks and looking at US Bank, and it's paying 3.4%. There are other banks that are paying even higher. Let's look at another bank. Wells Fargo, the much maligned Wells Fargo. This is a big wave that it took up here. We could take this wave. We could take this wave. And this pullback, does that Fibonacci fit? Not really. So let's take it to here. Does this Fibonacci fit? Yes, it does. Look at this pullback to 61.8 once and twice. Then it pulled back to here. Maybe if we put our 27.2 in there, let me change to a Fibonacci of green. There we go. We had a pull back to 27.2 and a little bit lower, but now we've nudged up over 50%. Now Wells Fargo keeps going from one scandal and one huge fine to another. It's up to you if you want to invest in it. Take a look at what the dividend is. From a relative strength point of view, it's right at the top of the RSI, as I'm sure all the banks are right now. Bank of America. If we look at Bank of America's high before the financial crash to its low, and the Fibonacci's that it has here, we've got two different sets of things going on here. We've got this Fibonacci, which is this move right here. And we are approaching 68.1% of that Fibonacci. Let's get rid of this one. Let's just look at this big wave. We could also do a Fibonacci taking a look just at this and see where it's heading on a Fib extension. But Bank of America at 34.85, if you're investing in financials, that's not a bad one. If you want to pick your own stocks, or you can just go with the XLF. Goldman Sachs. Let's look at Goldman Sachs on this Fibonacci, which is its low from 1999, again 2002, to the 2007 high, then down to the financial crash. That's the Fibonacci that we're looking at here. That one is pretty much the same as this one, right? And we've come into 100%. Let's just do an extension. And let's do an extension. let's not do an extension, let's do a retracement. Retracement from here down to there. And how do we sit? We are struggling with 138.2, popping over it. Is this a good Fibonacci? Well, we came up to this high, pulled back to the 78, didn't quite make 127.2, might have made a middle Fibonacci, some minor Fibonacci, came down to 50, came back to 100, came down to 38.2. This is a pretty good set of Fibonacci's. We're going to 348.11. Is it the best financial stock to pick if you're looking to invest? Pricey, maybe not. JP Morgan, probably the best bank in the United States. And if you take a look at how it's behaved, we can do it's just taking off. Look, this was its high. It came down, retested its high. Did it behave with Fibonacci's? Let's take a look at a retracement there. And let's go here, down to here, which is also this low here. So that's an important low because it did come down to test it there. And we had a pullback to 50%, and now we've had a breakout over 100, and it is going higher. If we did an extension, where are we headed to? From a Fibonacci point of view, we are headed to, let's go to the greens, and we are heading to 175.33 with some stops in between, but JP Morgan would be a good stock. Now you could make a basket of your own and make your own little ETF, and you could buy 50 shares of Bank of America, 100 shares of JP Morgan, 50 shares of US Bank, 25 shares of Wells Fargo, buy a little bit of XLF and create your own little ETF. Or you can buy some American Express and some Visa and some MasterCard, and then just keep buying the basket. Some trading platforms will allow you to set up baskets. So you buy one block of your basket, and that would be 10 of this, 10 of that, 25 of this, 50 of this, 100 of that. And then you just, when the time is right, when there's some pullbacks, when you have more money, buy another block of your basket and build up a financial portfolio that way, reinvest your dividends much the same. So yes, financials are a good buy right now. I hope that I've shown you a way to take a look at some financial alternatives, how to 3 tools, tip ranks, FinViz, and your charts, and how to build your own little portfolio of financial stocks for the future.